Thank you for watching our video. There is a certain pattern present in similar movements. I have no proof, but I vaguely think so. I can tell you how many times I've lost when I've waited for a push to enter a market because it made a new high, only to give up because of my poor market sense. Especially the euro dollar. I've lost most of my money in the formula by buying at the push point. If you change your approach just a little bit, it will work. Don't give up. You will be fine. When the price hits a high, the price will then go up. In other words, you don't have to wait for it to come back. Where do I buy when the price hits a new high? Specifically, when the previous day's high is renewed. Buy as it is. For example, you see the candlestick here. The candlestick here started here. It temporarily went this high and finally went back up and closes here. In this case, the previous day's high is here. Buy when it closes here. Then the price will not rise for this amount of time. The price will eventually come back to this point. The price will eventually return to this point. But after that, as you can see, the price will rise. In other words, you buy when the price exceeds the previous day's high and hold it. The candlestick here is the same. The previous day's high is here. When the price exceeds it, the price rises. It is the same in this case. The high of the previous day is here. Price rises when it closes here. The next candle. This little black bear opened and closes between the high and low of the previous candle. The price rose temporarily but did not exceed the previous day's high. This is when the trend changes, when the candlestick changes color. This is not exceeding the previous day's high, so it goes down like this. The high has been broken, so an ambush is set. You can get a larger profit margin by entering a new high than by waiting for this timing. We trade when the high is broken. You're going to buy. That is the next candlestick. The candlestick here starts at the bottom and closes at the top. The high of this candlestick is above the high of the previous candle. The fact that it is renewing means that prices will then rise. In fact, it rises. The previous day's high is to be renewed. If it renews, then prices will rise. This is the same thing. If the previous day's high is renewed, the price closes up a little lower than the previous day's high when viewed on a closing basis. Same here. The price closes lower than the previous day's high. Most people give up halfway through when it comes down because they are afraid of unrealized losses. This is a trend-following type of market that follows the trend. It is very important to make new highs, so to speak. It works especially well in stocks. The same is true here. This candlestick started here. It closes with a big rise above the previous day's high. So the next leg is the key point. This candlestick here opened here and closes below. It will fall because it does not exceed the previous day's high. We're waiting for a push. We need to wait for a push at these times. In other words, the color sequence is a trend. When the colors change, it is the end of the trend. When prices go up, you get a series of colors like this. The same is true in the opposite case. When the price falls, the color will be the same in a series of colors. It is a series of black bears. Reversing the concept, when a new low is made, or when the previous day's low is made, it is a sign to sell. You can see it in this candlestick. A new high is a buying opportunity. When a new low is made, it is an opportunity to sell. You can buy or sell at that time. Don't bother waiting for a push. Stop the process of waiting. It makes it easier. There are two things you have to do. You only have to do one of the two things you have to do. Wait for a new high and wait for a push. All you have to do is wait for a new high. When it makes a new high, just buy. Or sell when it makes a new low. This will work. If you have any further questions, please send us an email anytime. Thank you.